She had been paying the same Medicare bill every single month for 4 years. Never questioned it. Never missed a payment. Built her entire retirement budget around it the same way she had built her career, carefully, without complaint. And then a stranger in a waiting room said 6 words that changed everything. "I haven't paid that premium in years." That one sentence led to 3 phone calls. And by the time her next Social Security statement showed up in the mail, her monthly income was $570 higher. Permanently. Not from a lawsuit. Not from some new program Congress just passed. From 3 calls she could have made the day she turned 65. Calls nobody, not Medicare, not Social Security, not her doctor, had ever thought to suggest. If you're over 60 and you've never made any of these 3 calls, there's a real chance this video is going to be uncomfortable to watch, because what we're about to go through isn't complicated. It isn't rare. It is, however, something the system has absolutely no financial reason to ever explain to you on its own. If this channel is new to you, now's the time to subscribe and hit the notification bell. Every week we cover the retirement rules that cost seniors real money when they go unnoticed. And the people who find out tend to save a lot more than the people who don't. Before we get into all 3 calls, I want to flag 2 things we're going to cover along the way. First, one of these calls comes with a federal legal protection that most seniors who qualify for it have never once used, and providers who violate it can face government penalties. Second, there's a scam running right now in 2026 that specifically targets people who learn about call number 1. I'll give you the one sentence that shuts it down completely. Both are coming. Don't skip call 3. It's the one the Social Security Administration has the least financial reason in the world to bring up first. Let's start with the most overlooked record in your entire retirement. You have a file sitting on a government server with your name on it. It contains every dollar of wages you earned for every year you worked. And Social Security used that file to calculate your monthly benefit. Most seniors have never once looked at it. Here's why that's a problem. Your Social Security benefit is calculated from your 35 highest earning years. Every single figure in that calculation came from a payroll report your employer submitted. Before the year 2000, most of that processing was done by hand. Paper forms, manual data entry, clerks transcribing numbers, and anyone who has ever worked a clerical job knows what happens when you're entering thousands of records manually. Things get transposed, skipped, or attached to the wrong person entirely. A joint IRS and SSA review found that roughly 3.3% of all Social Security wage entries contain errors. Apply that to 70 million beneficiaries, and you're looking at more than 2 million people collecting less than they actually earned. Not because they did anything wrong, because someone in a payroll department made a data entry mistake decades ago and nobody ever checked. Now here's what one missing year actually costs you. Each incorrect year on your earnings record reduces your monthly benefit by around $100 mensuais. $100 permanently. That's $1,200 a year. On a 20-year retirement, 1 missing year is $24,000 gone. 2 missing years is $48,000. 3 is $72,000. And the record has been sitting there the entire time, available to anyone who wants to look at it. So before you make this call, spend about 10 minutes doing this first. Go to ssa.gov and log into your My Social Security account. If you don't have one, create it. It takes about 10 minutes, and it is genuinely the most useful account you will ever set up for your retirement. Once you're in, pull up your earnings statement. You'll see a list of every year of your working life with a dollar figure next to it. Go through it. You're looking for 3 things. Any year that shows 0 when you know you were employed, any year where the number looks significantly low compared to what you remember earning, and any year that's simply missing from the list. Pay the most attention to your highest earning years. An error in a year where you made $60,000 does far more damage than an error in a year where you made $18,000. Also, look closely at years when you changed jobs. Every employer transition was another opportunity for someone in HR to attach your wages to the wrong record. And if you're a woman who changed your name at any point during your career, whether through marriage or divorce, look specifically at the years around that name change. A mismatch between the name your employer submitted and the name on your Social Security record can prevent those wages from attaching to your file at all. Decades of work, sitting in the SSA system, credited to nobody. Once you've spotted anything that looks off, make the call. The number is 1-800-7721-1213. When someone picks up, say this: I want to request my complete earnings history and verify my record for any discrepancies year by year. That language opens the right process immediately. The correction form is SSA 7008. It's free at ssa.gov. It has to be mailed or hand-delivered to your local SSA office. It cannot be filed online. Sign it in ink before you send it. An unsigned form is treated as if it was never filed, and the correction window keeps running while you wait. The woman from the waiting room story? Her name is Margaret. She found one missing year, 1994, 8 months at a printing company that closed the following year. The company's final payroll submission was never processed. One correction added $87 to her monthly benefit, every month, for the rest of her life. Now, before we move to call 2, I need to tell you about something running specifically around earnings corrections right now, because it's targeting seniors who've watched videos exactly like this one. After someone learns that their earnings record might have an error, they sometimes get a call or see an ad from a company calling itself something like a Social Security Benefit Recovery Specialist or a Federal Earnings Audit Service. The pitch sounds helpful. They'll handle the SSA 7008 filing, the documentation retrieval, all of it, for a flat fee of several $100s or a cut of every larger check you receive going forward, sometimes 20% or more. Here's the sentence that exposes this every single time. Everything they're offering to do is completely free, and you can do it yourself directly with the SSA. Downloading Form SSA 7008 is free. Retrieving your wage records through the SSA going back to 1978 is free. Pulling income transcripts through the IRS using Form 4506-T is free. Filing the correction is free. The entire process costs you nothing except the time to make the call and mail the form. Anyone offering to handle this for a fee is following the exact free steps you just heard and charging you for the privilege of watching them do it. End that call. The only number that handles earnings corrections is 1-8007-721-213. The only form is SSA 7008. Both are free. If someone pitches you a fee-based service, report it to the SSA fraud hotline at 1-8002-690271. All right, call 2 doesn't go to Social Security at all. It goes to a completely different agency. And the gap between those two agencies is exactly why an estimated 7.5 million eligible seniors are paying a premium every month that their state was supposed to be covering. The program is called the Medicare Savings Program. Congress created it in 1988 specifically to help lower-income seniors with their Medicare costs. In the nearly 4 decades since, federal funding for outreach was never allocated. The assumption was that state Medicaid offices would identify their own eligible applicants. Most states have never had the staffing or the budget to do that consistently. So the program sits there, worth between $2,500 and $6,000 a year per qualifying senior, and the people it was designed for pay their premiums every month without ever knowing they could apply. Here's why Medicare never tells you about it. Medicare is run by the Centers for Medicare and Medicaid Services. The Medicare Savings Program is administered by your state Medicaid office. 2 separate agencies, 2 separate databases. They don't automatically cross-reference. And your Medicare plan has no financial incentive to flag you for a program that eliminates what they collect from you. So the conversation never starts. Here's how you start it yourself. Call 1-800-633-4227. That's 1-800-MEDICARE. Ask to be connected with your state's Medicare Savings Program office. When someone picks up, say, I want to apply for the Medicare Savings Program and find out which tier I qualify for. There are 3 tiers, and each one covers a different portion of your costs. The first is QMB, Qualified Medicare Beneficiary. In 2026, the income limit is $1,350 a month for a single person, $1,824 for a couple. QMB is the most valuable of the 3. It covers your Part B premium completely. It covers your Part A premium if you pay one. It covers your annual deductible and every copay and coinsurance charge on every Medicare-covered service. Nothing out of pocket. The state pays it directly to Medicare on your behalf. Depending on how often you use Medicare-covered services, that can be anywhere from $2,500 to $6,000 a year back in your pocket. The second is SLMB, Specified Low-Income Medicare Beneficiary. The 2026 income limit is $1,616 a month for a single person, $2,184 for a couple. SLMB covers your Part B premium only, but that's $202.90 every month eliminated. That's $2,434.80 back in your income every single year. The third is QI, Qualifying Individual. The income limit is $1,816 a month for a single person, $2,455 for a couple. QI also covers the Part B premium completely, the same $2,434.80 a year, and reaches seniors who earn slightly too much for SLMB but still need help. One critical detail about QI that almost nobody mentions: QI is funded on a first-come, first-served basis each calendar year. When the annual funding runs out, new applications go on a waiting list. If your income puts you anywhere near the QI range, apply as early in the year as possible. Waiting until fall to apply for something that runs out of funding in summer is a mistake that costs you a full year of savings. Now here's the part nobody talks about when it comes to QMB. QMB doesn't just eliminate your premiums and copays, it comes with a federal legal protection that most people who qualify for it have never once used. Under federal law, any Medicare provider who bills a QMB recipient directly for a Medicare-covered service is violating federal law, not a gray area, a documented federal violation. If a doctor's office, a hospital, or any Medicare provider sends you a bill for a copay or a deductible after you're enrolled in QMB, you are not legally required to pay it. What you do instead is tell the provider you're enrolled in QMB and ask them to look up your coverage status in the Medicare system. If they keep billing you, report it to Medicare at 1-800-633-4227 and to your state Medicaid office. Providers who knowingly bill QMB recipients can face federal penalties. Margaret had been paying about $150 a month in copays before she enrolled. After QMB enrollment, those bills stopped. Combined with the eliminated Part B premium, her savings from Call 2 alone was $352.90 every month. And here's the bonus that almost never gets mentioned clearly. When you enroll in any tier of the Medicare Savings Program, you're automatically enrolled in Extra Help, the federal program that reduces your Medicare Part D prescription drug costs. No separate application. It happens automatically as part of your MSP status. With Extra Help active in 2026, your maximum copay is $5.10 for generics and $12.65 for brand-name drugs. No Part D premium, no annual deductible. For seniors managing multiple medications, the savings from Extra Help alone can reach several $1,000s a year on top of everything else. Now, before you decide this doesn't apply to you, let me address the thing that stops most people from even making this call. A lot of seniors assume their savings or assets disqualify them without ever checking the actual numbers. In 2026, the asset limits are $9,950 for a single person and $14,910 for a couple. Your primary home is not counted. One vehicle is not counted. Only liquid assets, bank accounts, stocks, bonds. And 12 states have eliminated the asset test entirely, meaning if you live in one of those states, only your income is considered. The rule is simple. Don't disqualify yourself before you call. The application takes about 15 minutes. The cost of applying and being told you don't qualify is 15 minutes. The cost of not applying when you do qualify is potentially thousands of dollars every year for the rest of your retirement. Do the math. By the way, if you're finding this helpful, don't forget to subscribe. It helps the channel, and it makes sure you don't miss updates when these rules change, which they do, more often than most people realize. All right, call 3 goes back to Social Security. Same number as call 1, and this is the one the SSA has the absolute least financial reason to ever bring up on its own, because every month you don't make this call is another month. A surcharge keeps running on income you may no longer even earn. This is about IRMAA, Income-Related Monthly Adjustment Amount. It's a surcharge added to your Medicare Part B premium when your income from 2 years ago crossed a certain threshold. And that 2-year lag is exactly where the problem lives. Your 2026 surcharge is based on your 2024 tax return. Medicare looks at that return, applies the calculation, and adds the surcharge to your monthly premium automatically. No letter explaining the reasoning, no suggestion that you might be able to challenge it. The number just appears on your statement and gets deducted from your Social Security check every month. And if something changed in your life between 2024 and today, if you retired, lost a spouse, sold a property, or had your pension reduced, the surcharge hasn't changed with you. It's still running on the old number, on income you no longer earn, on a tax return that no longer reflects your life. Let me give you the exact numbers so you know what this call is actually worth. For a single filer in 2026, if your 2024 income was above $106,000, you're paying an extra $81.10 a month on top of your Part B premium. that's $973.20 a year. If it was above $133,000, that surcharge jumps to $204.40 a month, $2,452.80 a year. Above $167,000, it's $324.70 a month. Above $200,000, it's $445 a month. And the top tier, income above $500,000, adds $576.90 a month to what you're already paying. These amounts sit on top of the standard $202.90 Part B premium. A senior at the second IRMAA tier is paying over $407 a month just for Part B. Over a year, that's nearly $4,900. And if their income has dropped since that 2024 return, Medicare is still collecting every cent of that difference with no automatic correction in place. Sounds crazy, right? But it gets worse when you factor in the context. The Part B premium went from $185 in 2025 to $202.90 in 2026. That's a 9.6% increase in a single year. Social Security's cost of living adjustment for 2026 was 2.8%. Before a single retiree spent anything on groceries or medication, nearly a third of their entire annual raise was already gone. Seniors paying an IRMAA surcharge on top of that absorb the hit twice, once from the premium increase and once from a surcharge tied to income they may no longer have. Now here's what you can do about it. The SSA 44 form exists specifically for this situation. It's called the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. It lets you document your current income and request that your surcharge be recalculated based on what you earn now, not what appeared on your 2024 return. To get the process started, call 1-800-7721-213. When an agent answers, say, "I want to request the SSA 44 form to appeal my IRMAA surcharge based on a qualifying change in my income." That language opens the correct process immediately. The 5 qualifying events recognized on the SSA 44 are retirement or work stoppage, death of a spouse, divorce, reduction in work hours, and loss of pension income or income-producing property. If you sold a property or business in 2024 and it inflated that tax return, but the income doesn't recur, that qualifies under the loss of income-producing property category because the sale was a one-time event, not an ongoing income stream. For retirement, bring your final pay stub or a letter from your former employer confirming your separation date. For the death of a spouse, bring the death certificate and documentation of the change in your household income. For a property sale, bring documentation showing it was a one-time transaction and evidence of your current ongoing income. Once you submit with supporting documents, your surcharge is recalculated based on current income. If your income now falls below the first IRMAA threshold, the surcharge is eliminated entirely. That typically takes effect within 60 to 90 days of submission. Every month you delay is a month of that surcharge you cannot recover retroactively. It doesn't roll back. It just stops from the date the appeal is processed forward. Margaret had been paying a $298 monthly IRMAA surcharge based on income from a property her late husband had sold 2 years before he passed. That one-time sale had pushed their final joint return into a much higher bracket. Her current income bore no resemblance to what Medicare was using to set her premium. She filed the SSA 44 with the death certificate and current income documentation. The surcharge was eliminated entirely. $3,576 a year returned to her account, every year going forward. Now let me pull all 3 of these together with the one idea that runs through all of them. 3 separate government systems: Medicare, your state Medicaid office, and the Social Security Administration. None of them automatically cross-reference against the others. None of them have a built-in mechanism that flags when the number affecting your payment is wrong and suggests you call to correct it, because correcting it costs those systems money, and systems don't voluntarily cost themselves money on your behalf. The result? The 7.5 million seniors who qualify for the Medicare Savings Program paid the full 2026 premium increase on a bill the state was supposed to be covering. The seniors paying an IRMAA surcharge on income they no longer earn paid it twice. And the seniors with errors in their earnings records collected their reduced benefit for another year because nobody checked the record on their behalf. 3 phone calls. None of them require a lawyer. None of them require paperwork beyond what most people already have somewhere at home. All of them are free. Here's your complete action list. Call 1. Social Security 1-800-772-1213. Before you call, log into ssa.gov and open your earnings history. Go through it year by year. Any year showing zero or significantly less than what you actually earned and is your starting point. When you call, say, I want to request my complete earnings history and verify my record for any discrepancies year by year. The correction form is SSA 7008, free at ssa.gov. Mail it to your local SSA office, signed in ink. If anyone offers to do this for a fee, that's the scam. Hang up and report it to 1-800-269-0271. Call 1-800-633-4227. That's 1-800-MEDICARE. Ask to be connected with your state's Medicare Savings Program office. Say, I want to apply for the Medicare Savings Program and find out which tier I qualify for. Don't disqualify yourself before you call. Your home doesn't count. Your car doesn't count. 12 states have no asset test at all. The 2026 income limits are $1,350 a month for QMB, $1,616 for SLMB, and $1,816 for QIE, all for a single person. If you're anywhere near the QI range, apply early in the year. That funding is first come, first served, and it runs out. Call 3. Back to Social Security, 1-800-772-1213. If your income dropped since 2024 due to retirement, the death of a spouse, divorce, reduced work hours, or a loss of pension income, say, I want to request the SSA 44 form to appeal my IRMAA surcharge based on a qualifying change in my income. Bring documentation of your qualifying event. Every month you wait is a month of that surcharge you can't get back. If you recognize your own situation somewhere in those 3 calls, a premium you've been paying for years without questioning, an earnings record you've never looked at, a surcharge running on income from a tax return that no longer reflects your life, the next step isn't another video. The next step is acting on what you now know before another month passes and another payment goes out that didn't need to. If you found this useful, make sure to subscribe and hit the notification bell so you don't miss future updates. And if you know someone who's been paying their Medicare premium every month without ever asking why it's the number it is, share this video with them. That one share might put hundreds of dollars back in their account every month from 3 calls the system had every reason in the world to never suggest. I'll see you in the next one.